Hello dear friends and welcome. You've just tuned into a channel where we dive deep into global affairs, not just listing events with shallow commentary, but unpacking the facts, data, and underlying dynamics that shape our world. Today's focus: a surprising turn in the US-China trade war. Yes, you heard that right. Washington and Beijing have agreed on a temporary reduction in tariffs. This could be seen as a ceasefire in the trade conflict that's been rattling global markets for months. In our previous episodes we shared 3 pieces of good news, and today we bring you another. But let's not forget the old saying, what seems like good news today might come back like a boomerang. So is this a genuine breakthrough or a trap in disguise? We leave that judgment to you. Here's the latest. Both the US and China have agreed to reduce their respective import tariffs for a 90-day period. U.S. Treasury Secretary Scott Bessent announced that the U.S. will cut tariffs on Chinese goods by 115%, while China will reduce its 125% tariffs by the same percentage, bringing the effective rates significantly down. Starting Wednesday, May 14th, the U.S. will drop its tariff on Chinese imports from 145% to 30%, while China will reduce its tariffs on U.S. imports to just 10%, a major and generous cut. This announcement came out of high-level negotiations in Geneva, where both sides showed, for the first time in months, a willingness to truly listen and engage constructively. The markets reacted instantly. Stocks surged, the US dollar gained value, and China's yuan hit a 6-month high. Even US Treasury yields rose, signaling investor optimism. Interestingly, President Trump hinted at this outcome last Friday, stating that the U.S. was willing to reduce tariffs to 80%, a level that would still restrict trade, but ease tensions. That in itself gave markets a breath of hope. Later that same evening, U.S. Commerce Secretary Howard Lutnick added more fuel to the optimism by suggesting a 34% tariff on Chinese goods, a number very close to what was finally agreed upon. It's now clear that both nations were ready to make concessions, just not without saving face. Before this breakthrough, both nations had been locked in a tit-for-tat tariff spiral, with the U.S. imposing a 145% tariff and China retaliating with 125%. This wasn't just a trade dispute, it was a de facto embargo, stalling over $600 billion in bilateral trade and wreaking havoc on global supply chains, fueling inflation fears, and even leading to layoffs in both countries. In April, China's exports to the United States plunged by 21%, and analysts projected an even steeper drop in May if the tariffs stayed in place. In response, China began redirecting its exports. Latin America saw an increase of 17%, Africa was up by 25%, Southeast Asia, specifically ASEAN, experienced a rise of 21%, and the European Union saw an increase of 8.3%. Still, despite these shifts, the U.S. market remains irreplaceable for many Chinese manufacturers, especially those tied to American companies. Meanwhile, in the U.S., small and mid-sized businesses were suffering. Larger corporations could rely on inventory buffers, but even they were running out of time. Had this deal not been reached, many feared a consumer revolt in the U.S., with inflation, stagnation, and product shortages looming. Let's not forget, China is the U.S.'s third largest export market, with $150 billion in American goods sold annually. The Chinese tariffs were choking off that access, hurting American producers. The Geneva talks weren't designed to produce a comprehensive deal. This is just the beginning, but it's a crucial first step. Both sides have agreed to create a joint consultation mechanism and assign representatives to work on long-term terms. If all goes well, we may see a more permanent agreement in the coming months. China's Vice Premier, He Lifeng, who led the Chinese delegation, stated that significant progress was made and that a mutual consensus was reached. While reaffirming that China does not want a trade war, he warned, "So what's next? While this 90-day deal relieves short-term pressure, uncertainty still looms large. U.S. universal tariffs of 10% on all countries remain intact, and if Washington resumes high tariffs on nations like Vietnam or Cambodia, global growth, employment, and trade could all take a hit. For now, markets are breathing a sigh of relief. Tariffs have dropped from 145% and 125% to 30% and 10% respectively. Some say it's like the old saying. So here we are, celebrating a win that simply took us back to less painful levels. And while that may seem ironic, it's also a sign of how desperately the world needs stability. Thank you for watching. We'd love to hear your thoughts in the comments below. If you enjoyed this video, don't forget to give it a like, it really helps us out, and if you haven't already, hit that subscribe button and turn on notifications so you don't miss our next deep dive into global affairs. Take care and see you in the next episode. Stay well, stay informed.